Hi everyone, I'm Artur from Multi and welcome to Reimagine. Today with me I have Loong from Rens, one of the leading protocols solving interoperability in blockchain. So very excited to talk more about the origin story of Rens, where they are today, and I guess most importantly, what Loong's views are on our very fast growing industry. So thanks so much for taking the time, Loong.
Yeah, thanks for having me, Arthur.
So let's just cut to it. So as far as I understand, what Rens does is that you built an independent blockchain that essentially helps to bridge other assets onto other blockchains. And the most notable use case is Rens BTC, which is a trustless way to basically bring BTC onto Ethereum. Am I right saying that?
Yeah, that's absolutely right. So we support all kinds of assets, but yeah, dominantly we see the major use case right now is Bitcoin on Ethereum.
And I think this is one of the things which and the stats are quite remarkable. What you guys have achieved, and this having been live for now, the mainnet has been live for 3 or 4 months.
I think we're about to hit our 5th month. I think we're like a week away from being at the end of month 5. Yeah, but we've done $620 million in that time, 500 million of which has happened in the last month. So, you know, we're seeing a huge amount of growth. Every single month, we've seen the income that the network is generating through fees almost double. With this month, them bringing in around 250,000 US dollars in fees.
Wow. And I think one of the things which isn't really talked about that much in Rens' case is that it is its own blockchain, but also that it's what we discovered in our research, like preparing for this, is that Rens is, like, by some category, it's one of the biggest blockchains, because you guys have over 1,000 nodes, right? While
yes,
like Cosmos is barely over 100, Tezos has 400, Polkadot is getting to 200. Is this something because this really stood out to us, and obviously we know that decentralization is such an important metric for when we talk about these different blockchain protocols. Is this something that you feel should get more attention, or is it just like the specifics of Rens that it is that easy to sort of to have a lot of nodes? Or
I don't think it's specific to Rens. I think we just took it really, really seriously. And we put a lot of effort. I mean, across the board, we put a lot of design and engineering effort into the user experience, whether that's what is the user experience like actually bringing Bitcoin to Ethereum, or what is the user experience like spinning up one of these nodes and actually contributing to network security. You know, we designed the system with the goal to have as many possible nodes in the network as we can, because that just makes the network more secure. And the goal is to, no system can be perfectly secure, but the goal is to be more secure than any of the networks that we're bridging, so that it becomes more efficient to attack the underlying network. Let's say it becomes cheaper or more easy to attack Bitcoin or Ethereum than it does to attack RenVM, which is sort of a good benchmark for security. And with the number of nodes that we have, we're already sort of getting very close to that level of security.
Okay, and I understand. I know, like recently, I guess as naturally as the blockchain or as the protocol grows in popularity, then obviously sort of criticism also heats up. So that some communities have expressed, some of the community members have expressed concern about that. Some parts of the protocol are controlled by the team nodes. What is the sort of what is the situation there? Because I understand that other community members at the same time, they're not concerned with this at all. That it's been transparently communicated and it's part of the process.
Yeah, so I mean that's correct. It has been transparently communicated. Since well before launch, we had multiple articles speaking to what the rollout plan is for the network, and we believe that any sensible rollout plan has to start somewhat centralized and become decentralized over time. We've seen several examples, even just recently, of protocols that go straight for decentralization, and they inevitably have issues, as all systems do. And the more complicated the network, the more likely you are to find problems. And if you begin totally decentralized with no form of central control, you're actually putting user funds at higher risk, because what you're not doing is taking into account the balance of risks of centralization versus decentralization. At the beginning of the network's life, the risk introduced by decentralization is actually higher than the risk introduced by centralization. And then obviously as the network matures, bugs are found, people get more comfortable, people become more understanding of how to use the network safely. So, we're not even talking about bugs in the network. We're also talking about, best practices for users to go through. There've been situations with RenVM already where we've had users misuse the system. So the network itself hasn't had any bugs, but people have misunderstood how to use it and they've made a mistake. And if we were fully decentralized, it would have cost them hundreds of thousands of dollars in total. But we've been able to recover those funds because of the level of centralization that we're beginning with. And we can, as the community gets, more comfortable with how the system works, and we see those incidences happening less and less, and we're not seeing bugs get reported, and we're not seeing major fixes needing to be deployed, then we can move to a more decentralized model, and we can start saying, okay, we're confident that the system is stable enough and secure enough that the risks of being centralized are now beginning to outweigh the benefits that we could get by becoming more decentralized. And so we're sort of going to stage the network through multiple steps.
Mm-hmm. And I guess everyone's, or the sort of particular people's question is when do you expect to phase out the team nodes? Are we talking about in the next 12 months, 24 months, 3 months?
Certainly, we expect that process to begin this year. We don't like giving hard timelines because a lot of these things can't be really known. They're more metric based than time based. It doesn't really make sense to say, "Oh, let the network run for a few months." What you want to say is, let the network run for a few months without a major bug fix being necessary at that time. And so if you then, maybe you get to the very last day and you see a major bug fix needs to be deployed, then you deploy it and you start the counter again. You do this until you've arrived at a certain amount of time where no intervention has been necessary into the system. Because obviously the more decentralized you become, the less and less possible it becomes to intervene. That's kind of the whole point of decentralization. So yeah, we do expect to begin that process this year. It's not something that we're hoping to keep. We want to make this decentralized as quickly as possible. So we can get there. But
I'm sure. And you mentioned that so far no bugs have been found. Do you, as the ultimate builder of Ren, does that give you more confidence or less confidence that maybe it should be hit harder?
So we have found bugs. That's not entirely true. We haven't. We haven't found any that have been the cause of like a user encountering in the wild. There have been things that we've discovered through review, through the extensive testing that we have available on the platform. And none of these bugs have been things that have caused downtime for the system. So the system has been able to provide a 100% uptime since its launch, which is awesome, and that gives us a lot of confidence. But yeah, I guess as we go through and we find more of these bugs, and they have become less severe over time. And we haven't found any really in the last month or so. This gives us a lot more confidence that the system is correct. But more than anything, I think the thing that gives us confidence is the ability to slowly open source your code base and have the whole community get their eyes on it and not find any issues, and have multiple rounds of auditing undergo completion, and hopefully you don't find anything there. So I think less so than the lack of finding bugs, I'm gaining confidence in the system through the additional audits that we've been undergoing that haven't been able to find any outstanding issues. And obviously that's not a perfect metric for security, but it's about as good as you can get.
Yeah, exactly. And I think Ren's approach throughout has been very, very sort of calculated and kind of meticulously planned in terms of, and I guess it differentiates from some of your competitors, where instead of Ren, you took a strategy of on the design level, there's a lot of kind of clearly a lot of thought through decisions have been made around UX that you mentioned, and some other things which I'd like to get into, but also how you prioritize the audits and really taking a staggered or a tiered approach, as opposed to I guess some of the other participants in the space that did decide to not really prioritize audits that much, and I think stayed live for 24 hours or something like that until something disastrously broke down.
Yeah,
yeah,
something like that. Yeah.
But tell me about that. We're huge fans of some of the kind of design decisions that Rens taken around, like for example, solving for gas, that bringing in like the gas as a service, and all these sorts of seemingly tiny things, but that actually do make a big difference when it comes to the like overall usability. But I'd like to get your take on one thing, which is that so Ren as a protocol, it's purely fee driven instead of having an inflation. What was like the thought process, or what was your kind of approach there? Because obviously inflation is it's easy to program in, right? And it gives you a kick right off the start.
I think that's almost the problem. Certainly when we started designing this system, the blockchain space and the cryptocurrency space specifically was nascent enough that not many people understood how to value these different token models that were around. Like, how do you value ETH? When you think about the revenue that you're generating is in the ETH itself, or that you can't apply just like traditional valuation mechanisms. And so it's very difficult to understand what is the value of the network. Now, for most chains, that's not necessarily an issue. Understanding the value of the network is something you just let the free market decide. In the case of RenVM is securing other assets. So it's reasonably important to understand what the value of the network is proportionally to the system that it's securing or helping secure. So it's important to help the market arrive at mature valuations for Ren that aren't hyperinflated, but also aren't undervalued, right? So if you have a Ren valuation that's way too high, then you get this false sense of security in the network, because it's likely that the token price will crash hard, and then maybe you arrive in a situation where the network becomes illiquid or unable to underwrite its risk. Or you can have the opposite problem where the system doesn't scale as well as it really should or could because people aren't valuing it properly. By having a very simple model where you simply say, if you hold this much Ren, you have access to this much fees, you have a very clear, very traditional, very well understood way to value the token. Now, obviously, we're not going to see that straight away because Ren is part of the crypto ecosystem. So you see a lot of that sort of craziness happen. But at the moment, the price of Ren means that the nodes are returning a 10% to 15% APY. That's a pretty reasonable APY, especially in the sort of current global financial situation or economic situation. It doesn't look as crazy good as some of these DeFi yield farming things, but it's sustainable. They're real fees. They're coming in hard cryptocurrencies, not odd governance tokens that are meant to be worth nothing. So that was the reason why we made that decision, really, is it gives confidence in valuation of the token. And it gives the node operators confidence as well, because obviously if you get this sudden hyperinflation, there's a big incentive for these nodes to suddenly disband the network and sell their bond. Whereas if you kind of reduce the likelihood of that, then you get stability in the network overall.
Got it. No, I think it makes complete sense, and I guess, and also if you do have hyperinflation of the token price, then the nodes themselves, a particular node's yields go down as well, and it's kind of, I guess, it like debalances a lot of things.
It's hard to know, right?
Like the economics.
I guess if you're earning Ren as part of why it's getting inflated, then maybe your earnings actually look really good on paper, but they're actually maybe not that good on paper. I think the other thing is that, like, if you look at Bitcoin, the original thesis was that you have a block mining as a way to get the initial supply out, but then eventually the network becomes reliant on fees and fees alone. Obviously, because we have all this beautiful infrastructure, when we came along, we didn't have to rely on continuous mining in order to distribute the token. We could just provide it to the market straight away. So Ren's been out on the market for several years now, which means it has a good distribution amongst holders. But we can also help, again, through a carefully planned rollout of multiple phases. You can get the network to a stage where it is already functioning safely off of the fees that it's generating before sort of relinquishing full control over the system. And it gives us a chance also to tweak the economics. Maybe in 6 months we discover that it's just completely somehow fundamentally unfeasible to not have inflation. Well, again, by having a carefully staged rollout plan, then we have the possibility to make those changes.
Sounds good. But let's zoom out a bit. Tell me a little bit. How did you you and your co-founders, like, how did you kind of arrive at the idea of Ren, or what is the founding story?
Well, when we first got into the space, was kind of 2017. Interoperability was kind of a topic back then, and I think that's where we saw the birth of protocols like Cosmos and Polkadot try to resolve the interoperability problem at that level. But while everyone had kind of this inkling that getting Bitcoin onto Ethereum would somehow be good, there wasn't a clear use case for it, right? Back in 2017, there wasn't much that you would do with your Bitcoin on Ethereum that you really couldn't do already. That narrative really changed over the last 2 years. So during that period, we were developing other products. And what we realized in that development was that there really was a big gap for interoperability, that we got, I guess, sort of empirical evidence through our own development that we really wished we had access to a clean, trustless, and decentralized way to trade Bitcoin and Ethereum. That was the specific use case then, actually doing a swap. Mm-hmm. But then so we sort of decided to pursue that. And that was really where we started going. And back then I think that was late 2018, DeFi was just starting to get thrown around as a concept. It wasn't really that big of a deal, but both Ty and I saw a clean and clear opportunity. Like if we were having this problem where we couldn't access trustless, decentralized Bitcoin and Ethereum, that every single other protocol that was currently being built was going to have that problem. Maybe not yet, maybe in 6 months, maybe in a year, mm-hmm. but they will eventually happen. And the more that these layer ones come out, so when Cosmos eventually hits mainnet and Polkadot eventually hits mainnet, they're all going to have this problem too, And so we managed to get in there and I guess recognize the real need for it really early on. And we just took a bet that was going to be the way things were going to go. And 2 years later, we were right.
That's awesome. Congrats.
Yeah, thanks.
And I guess today around like 99% of the volume is Bitcoin on Ren. That seems that there is the most demand for. Where do you see it kind of moving next? Because it seems that the market seems to want only Bitcoin. Do you see that is the next opportunity not maybe bringing a new asset onto ETH, but to bring Bitcoin onto a new blockchain then, or?
Yeah, I think that's going to be where we see the next big sort of wave of volume come from for interoperability. There are going to be two phases to that, or two moments, I guess, in interoperable volume. There's going to be the moment that RenVM brings Bitcoin to other chains. So we're looking at Polkadot and Binance Smart Chain as the next steps. Polkadot because it's such a big ecosystem. And if you can bring it to one chain in the Polkadot ecosystem, then you bring it to all chains in the Polkadot ecosystem, which is quite nice. And the developers there have been super helpful with us preparing that work. And then Binance Smart Chain because it's a clone, more or less, of Ethereum from a technical perspective. So it's incredibly easy to support. And we want to experiment with supporting other ETH-like networks. It's the same reason why when we launched, we didn't just launch with Bitcoin, we launched with Bitcoin Cash and Zcash as well, because we wanted to experiment with what other Bitcoin-like assets to work with. And that way it helps us prevent making our design too specific to one chain. So by supporting as many chains as we can early up, you intentionally go for some that are very similar but slightly different. So, Binance and Ethereum, and then you go for ones that are very different, like Polkadot and Ethereum, because that gives you good coverage. And if your design works for them, it probably works for everything else as well. So we'll see some volume come from there without a doubt. There's a budding DeFi ecosystem roaring and ready to go in the Binance Smart Chain side of the world and the Polkadot side of the world as well. And then I think the next moment that we'll see big volume occur is when you can start shifting assets across chains, right? So right now you can take Bitcoin from the Bitcoin chain and you can put it on Ethereum and you can get it back. And maybe you can do that at Binance and you can get it back as well. What's going to be really cool is that when you can move the representation on Ethereum into Binance or into Polkadot without moving the underlying Bitcoin, because now you can suddenly start sending what is traditionally a very slow asset, Bitcoin, between two chains at a very high speed, because those two chains are quite, Ethereum and Polkadot are relatively fast compared to Bitcoin. You're not waiting an hour, you're waiting a couple of minutes. Has a huge speed improvement and you're still getting a lot of good interoperability. So instead of going back to Bitcoin, and then from Bitcoin to Polkadot, you'll see this just one-step hop. You halve your fees, you order of magnitude reduce your waiting times. So it's just an obvious use case, and it'll allow these sort of competing systems that are able to generate high yields during their nascent days. People will be able to very quickly move their funds around to leverage that yield.
Got it. And I guess with like Ethereum nowadays, everything is sort of, there is this big kind of sort of elephant in the room around the congestion, right? Someone even made the joke that to optimize for fees, they should bring a colored coin Ethereum onto Bitcoin. That so those that want to pay less transaction costs can use that one instead. But
that's funny.
But so you mentioned you support Zcash. Can Ren, so, and that obviously it's a privacy coin. Can RenVM also support Zcash's shielded transactions as well?
In principle, yes. So one of the cool things about the approach that we take is that our MPC technology is also computationally complete. So what that means is we use it to do signature generation and private key generation, but there's nothing stopping it from doing arbitrary computations. There is a question about how efficient those computations might be, but at least in theory, anything that you need to do to create a transaction is something that RenVM can do. So you could support Zcash shielded transactions, but I guess the privacy question around Zcash is actually a little bit more interesting than that, because privacy comes from keeping your assets in a shielded address all the time. If you keep your assets in a public address, and then at the moment that you want privacy to do a shielded transaction, you're just not getting security. It's way too easy to correlate the movement of funds. So if you're holding your assets inside a shielded address, and then you make a transaction to RenVM as a public transaction, you actually haven't reduced your privacy at all, right? Because no one can tell where that money's coming from. And as long as when it gets minted on the other side, it also goes back into a hidden form on Ethereum, which of course you can do because Ethereum is Turing complete, so we can build all sorts of privacy layers there. Then you've kind of, a transaction comes out into the public for a moment and then disappears back into being private. You can't see where it came from, you can't see where it went. And so you maintain the same levels of security. So the need to support shielded transactions directly is not actually necessary in RenVM in order to maintain security.
Is this a direction that you kind of received like requests to go into, or not today?
Funnily enough, we've received more questions about that from people outside what I would say is the core Zcash community than we have from the people within it. Because I think the people from within the core community understand that requirement a little bit better, and they understand that security really does come from where your funds are at rest, not what they're doing when they're moving around.
Because I guess like one of the use cases that we had in mind on our side was basically that if you would support shielded transactions, then it would kind of allow to create this mixer of sorts for BTC or ETH, right? And then I guess my next question was going to be, I'm not sure whether you answered that already, but was whether Monero can technically also be supported, or would it be the exact same problem as you mentioned with Zcash's shielded transactions?
So so to answer the two questions there, in principle, yeah, you can build a mixer for Bitcoin and Zcash through RenVM. RenVM itself doesn't implement the mixing, but it just allows you to take your assets and move them to a platform where mixing can occur, something like Ethereum that has the smart contract capabilities. But you don't need shielded transactions at the Zcash layer to make that work. You can make it work with that. The question about Monero, again, in principle, yes, our MPC is computationally complete, so we could implement a Monero key generation and signing. But the question, again, comes down to efficiency. So Monero is interesting because it uses a different underlying cryptographic standard to what most other chains use. And that's not a cryptographic standard that we have put a lot of effort into supporting in RenVM in a super efficient way, mostly because all of the big chains don't use that standard. So we don't need to. So from a focus perspective, it enables us to get it right for Bitcoin and Ethereum and those types of chains. And then maybe in the future, we can begin researching what it would be like to support those kind of cryptographic standards that Monero needs. Again, in theory, there's nothing stopping it being possible. We just haven't done the hard research to know how efficient that can be made.
For sure. And I guess there's the obvious sort of kind of like trade-off there as well. Like, do you want to put this sort of like, slightly shady attention to the to something that's kind of not intended to be used only in this kind of way, right? But another question I wanted to ask was that, so we noticed that RenVM is recently started getting started support from the Nexus Mutual's insurance covers contract. And so what was the team's like thinking about this offering? Because obviously Nexus Mutual is another very unique protocol in the space.
Yeah, I think Nexus Mutual is a really cool idea. I haven't looked deep enough into, I guess, precisely how it determines whether a payout should happen, and how it underwrites those payouts in a way that is safe. But I think at least at a conceptual level, it makes sense, right? You would want to secure, or you want sort of an additional layer of security by taking insurance. I think the thing I'm most interested to see is not individual users taking insurance against a smart contract just in case it messes up. What I'd be even more interested in seeing is, what does it look like for a protocol itself to take out insurance for itself?
This is Ren.
Yeah, so for example, maybe is it possible for RenVM to take out insurance as a decentralized entity to cover itself, and as a decentralized entity to pay out the premiums or the fees that are required to hold this insurance? RenVM again is a prime candidate for something like this, because if you can take an insurance and you have alternate forms of underwriting the liquidity that you're keeping safe, but also as we talked about a little bit earlier, RenVM is a fee-driven system. So you can pay out fees in a hard currency to the Nexus contract. You can pay it in ETH, you can pay it in Bitcoin. And if they don't accept those currencies, there's a huge liquid market for Bitcoin, right? Whereas if you're accepting fees in Ren itself, or if you're inflating Ren in order to generate profit, then it's very hard to, you're dumping this on what is hopefully a very thin market, because most of the Ren should be bonded into the network in sort of the long term. So, I'm very interested to see whether we end up progressing in that direction eventually. I wouldn't be surprised if we do. I don't know whether it would happen with Nexus Mutual, but I do imagine that eventually we will see large decentralized insurance funds that are able to insure protocols as part of the protocol itself, not as just individual external users coming in and wanting to self-cover.
And I guess it would be like a pretty big leap forward for the insurance protocols themselves, which are now, I think, like today, they're essentially focused on providing like what they call smart contract insurance on Ethereum, right? But then to provide insurance onto something, technically, I guess, like in a completely different world, in a much different scale, would be definitely the future.
I think it's a natural next step for
them. Speaking of the future, I guess, what are you most excited about for Ren coming up in the next, I guess, months or years?
So short term, I'm looking forward to our community forum. So where obviously, as part of our plan to decentralize, we're looking at different mechanisms for governance, so that the team cannot be responsible or a sort of a central entity around deciding how the protocol progresses. So this will include, it'll include fairly simple things. So for example, what chains do we want to support? What assets do we want to support? And this is a natural question to pose to the community, because they're the ones earning fees in those assets. So, if we offer some weird ERC20 that they don't want to earn fees in, then, it doesn't make sense. So a community forum for people to discuss that. For node operators to decide on what they want the fees to be. So what kind of cut they want to be taking, and trying to find a balance between obviously generating as much fees as possible by either having low fees and high volume, or high fees and low volume. And then also more complex questions such as how do we improve the protocol? You know, there's a bunch of sort of discussions that are being had very informally in our community right now around potential features and upgrades that could exist to make the system even better than it is today. And I'm really looking forward to formalizing that process, making it completely transparent and public. You know, it is something that's fully transparent at the moment. You can kind of come into our Telegram and ask any of our community members or our team members about it, but having a place to sort of, you know, put all of that discussion in a persistent, permanent place, people can follow the discussion, people can make it very clear what their intents are. Because I think eventually that evolves into a proper formal governance mechanism where people are, you know, voting using their Ren, voting using their dark nodes, or any of these sort of more hard governance systems. And I'm really excited for that. I think maybe more boring answers are also things like, you know, some of the new chains that are coming up. You know, we've got chains like Akala, Filecoin, Binance Chain, Terra, you know, whole suite of new chains really. And it'll be really cool to see RenVM truly be multi-chain as opposed to just Bitcoin and Ethereum. Yeah, I think those are the things I'm most excited for in the next 1 to 6 months.
That's awesome. I mean, yeah, it sounds like it's definitely not going to be boring. But,
it's never boring.
And speaking of generally, let's say this, we live in the DeFi world. What are the things that you're kind of most excited about in DeFi generally, if you can't say Ren? And I guess the things that you're most disappointed about, if you can't say anything about your competitors.
I would say I'm pretty disappointed with some of the messaging around DeFi. You know, I'm just going to point out YAM, for example. I think it's completely disingenuous to say, this is an experiment, don't use it, but also here's an interface to use it. And the only way this experiment makes progress is if people use it. It's like, there's no way to conduct an experiment without people using this thing that you're saying, you know, warning, don't use. I don't think that's a genuine way to protect your users. It's hard to know the balance, right? Where is a developer responsible and where is the user responsible for themselves? And that's a difficult balance, especially in a space when it's all about being self-sovereign. I should be allowed to put whatever technology I want out there, and it should be people's responsibility to understand the risks. But I think the people around that ecosystem did not communicate that messaging properly to each other, either as developers or users of the system. I think the other thing is like this focus on APY, which is kind of a weird thing because obviously the DeFi space is all about finance, and finance is all about getting a return on your investment. A lot fewer people than I expected point at a 200% APY and say, this is clearly not actually a 200% APY. And pointing out the fundamental reasons why that's not the case. And I think conversely, what I'm really excited to see in the space is big liquidity pools form, like trustless liquidity pools form that can automatically shut those systems down. Because the reason why you get a huge amount of APY is because no one's leveraging, right? The more people that put money towards that APY, so for example, YETH is a great one. You know, why are the YETH returns so high? Well, it's because you're farming Curve and you're selling Curve or CRV on the open market. If enough people aggregate their funds to that vault, then the huge sell pressure of the CRV token reduces the APY to something that's normal, right? Something that people are actually willing to sort of reach equilibrium at. That if it goes lower, people pull out. If it goes higher, people put in. The market's just too inefficient to catch all of these different forms of APY that we can generate. So what I'm keen to see is these big pools of liquidity get created that will automatically leverage and balance. It'll be cool for a whole bunch of reasons. And we're already seeing sort of the beginnings of it with projects like YN, projects like, you know, KeepItDAO, these systems that are set up to do some level of automated, I guess, arbitrage of returns in the market. And that'll help us drive us to maturity, which I think the space really needs to get to quick if we want to keep growing.
Absolutely, and I guess if we talk about like this sort of this great innovation that we've invented this year, which is the governance token, you know, the mineable governance tokens. What are your thoughts on the like the Uniswap, SushiSwap kind of like drama, or specifically what was it called, the vampire attack like concept that, you know, I mean, yeah. What are your thoughts on that? That, you know, someone comes and, you know, forks an open source project, plugs a token to it, and suddenly
I think it's
someone, you
awesome.
know, uses.
Yeah, I think it's from a technical perspective, it's a huge testament to the composability of DeFi, that you can essentially strap on a governance token to someone else's system, which is essentially what SushiSwap did, right? They said, have the exact same system, we'll leverage the liquidity token that you get back from Uniswap as a way to essentially own the liquidity in a separate system, and therefore own the fees, and therefore we can generate a governance token. The moment you have a fee generating token that you get back is the moment that you can start doing these kind of wrapping attacks, if you want to call them that. I think we'll see more of this happen. There's no reason why you can't wrap a wrapping attack, right? So even if Uniswap comes out with Unitoken in the near future, or whenever they come out with Unitoken, there's no reason why you can't do the exact same attack. And in fact, the attack almost gets better, because now not only do you get to vampire off the fees, you also get to vampire off the Unitoken that you're generating by owning the liquidity. And then you can wrap both of those in another governance token. I think it's technically very cool. I think from a community perspective, people completely overvalued Sushi as a token for what it actually, like what it fundamentally is doing. And this is why I'm excited for these big liquidity pools to step in and see a ton of APY and say, cool, we're just going to farm all the sushi in the world and then just dump it on the open market and bring it back to a place that actually makes sense. And then these attacks,
nice. And I guess
Uniswap still works.
It can work both ways, right? It can add a token where it doesn't exist, or it can remove a token. And because like didn't technically in Uniswap's case, because like it was, the token was like, what SushiSwap did was it put the token back, right? Because like Uniswap was born as the Bancor without a token.
Yeah.
So it's kind of like a weird loop that we sort of went around. Another question for you: how do you see this? And I guess because there's so much talk around, you know, the ETH congestion and how is it going to, obviously, all of the like DeFi and non-DeFi builders are really struggling because of this now. That how can we build a scalable, reliable system on something where that, you know, that can be clogged so heavily by either like, you know, NFT tokens being sent left and right, or this like sushi mining happening. That how do you see that kind of like playing out in the, let's say, like, you know, over the next like 12 months? Because okay, like, you know, ETH 2.0 around the corner, but there is now more and more attention going to like level 2s and native chains.
Yeah, I think we are seeing a resurgence in interest in layer 1 chains. I think some of that is born of the fact that these chains are just reaching maturity. You know, obviously Polkadot is a huge amount of mind share, and they recently became available on mainnet, and they're slowly again going through their own phasing to roll out. You know, we'll see Ava coming out soon as well. So I think, you know, and we saw Binance Smart Chain come out very recently as well. So we're starting to see all of these new layer 1s coming out all in a very short period of time. And you're coupling that with a huge interest in Ethereum because of the DeFi boom, as well as a huge amount of criticism of Ethereum because of its lack of ability to scale. So I think people are looking at layer 1s. I think layer 1s are really where the solution happens. I'm not hugely bullish on layer 2s, just because they only really work if you have everyone go to the same layer 2. And a lot of the layer 2 designs, that defeats the point. Now, having said that, there are some layer 2s that, from a technical perspective, absolutely could be the solution. And we may well see people go to those solutions. Optimistic rollups, zero knowledge rollups are what I think I'm most bullish on as a layer 2. But what we're not seeing yet, and maybe this is just a timing thing, and we'll see where we go in 6 months, is we're not seeing all these DeFi projects agree on what layer 2 they're going to use. Because one of the beautiful things about DeFi on Ethereum is that you have this atomicity, where in a single transaction, you can take a flash loan, take advantage of an arbitrage, open a CDP, use the DAI to, you know, take out a loan, and just like compose like these weird and wacky transactions all in one single go. You can't do that if everyone's on a different layer 2. There's hope still to do it if everyone's on the same layer 1. On the same layer 2, depending on which layer 2 they're on. But Yeah, I think the real solution comes in at layer one. And so I think either people will eventually migrate to different layer ones and leverage interoperability like RenVM to keep that atomicity that RenVM still gives you between chains, or we'll see people just white knuckle it until ETH 2.0 comes out.
And I guess in some sense, like compared to like, for example, like 2017, the infrastructure has really matured in a sense that now for a layer one, there's just so much additional infrastructure such as Ren that provides interoperability within the different layer ones as well, right? So I guess like technically one could say that like the ETH killers, when a lot of them, you know, started on their kind of war paths in like 2016, 2017, 2018, it was too uphill of a battle, or like a vertical battle. But now maybe. What are your thoughts on Solana? So you haven't mentioned that. Is that something? Have you gotten demand for that from Rens side? Obviously, it's very new around the block, right?
Yeah, we have actually. So yeah, I mean, Solana is another one of those layer ones that all launched around the same time as you know, Polkadot and Binance Smart Chain. So all within sort of like the last quarter, really. We have seen a lot of demand. There's a lot of projects that we're seeing wanting to leverage the high speeds and low latencies that Solana can provide. And so we've been working very closely with the Solana team and with a few other teams to try and bring RenBTC to Solana as well. So we are hopeful that this will be one of the next chains that comes out. The only reason I don't mention is there's a few upgrades that the Solana chain has to deploy to their own mainnets before it can be compatible with RenVM, just because of the way that they're not technically Turing complete. There's like the language that you can program with is sort of a non-Turing complete slim subset of what most languages provide, with a restricted number of instructions. And those restrictions are just a little bit too restricting in the context of interoperability. But the team is doing awesome work to lift those restrictions for the specific cases of interoperability. So very likely this year we'll see BTC on Solana.
And to a non-developer, what does a non-Turing complete language mean?
A Turing complete language is basically a language that lets you do whatever you could possibly imagine. So if you can think it, you can program it. Whereas there are some programming languages that are much more restricted, that only let you do certain types of things. And they have nice properties. For example, you can tell whether or not this program is going to end at some point. And so some chains opt to intentionally not allow you to do anything so that they can prove properties about your program, such as we can prove that it's going to end eventually. Ethereum can't prove that your program's going to end. And that's actually why gas works the way that it does on Ethereum. It's just trying to sort of get around that problem.
Got it. You mentioned one thing about upgrading. How does that work in RenVM's case when an upgrade is pushed live? How do the nodes get upgraded?
So at the moment, the node operators have to opt into the upgrade. So they have to. We have a sort of control tool that nodes can use, or the operators can use, to administrate their nodes and manage them, and sort of keep an eye on them and reboot them and all these kind of things. And one of the options you have is to upgrade them. We're likely going to introduce a soft form of auto upgrade, so that there'll be certain types of upgrades that happen automatically. And of course, the node operators will have the right and the ability to disable that. And then there'll be like large upgrades that don't get done automatically, that have to go through a level of governance first. And the reason we want to do that is just for practicalities, that we have seen a lot of nodes not upgrade because the operators, I mean, in a weird way, it's kind of a testament to how well RenVM works. You can deploy a node and then forget about it and then come back 6 months later and it's still running and doing its job. But that ability to step away and not think about it has the sort of the problem that it's easy to forget to upgrade. And it's hard to reach a network of almost 1,300 nodes now and remind them all, hey, you gotta upgrade. So.
Absolutely. And I guess my question around like the DeFi and layer ones, today, I would say probably around like 1% of DeFi is off of Ethereum. If you had to guess, what would that percentage be a year from now?
I'm gonna give you a cheeky answer and say I think in a year from now it won't matter. I think people will stop asking questions about what chain is this application on. Chains will be on whatever application they need to be on for the technical reason that they need to be there, or for their user reason or product or business reason. Right now, we only see most of DeFi on Ethereum because that's where most of DeFi started. It's basically, it's a grassroots argument. Once interoperability comes and you can do the kind of things that RenVM lets you do, those questions will stop being relevant. As a user, you won't have to think and say, oh, I hold Tezos, so can I use MakerDAO? Or I hold Bitcoin, can I use Akala? Or, you know, I like Band Protocol, which is on Binance. Can I still interact with, you know, Compound, which is on Ethereum? Those questions won't even be relevant anymore. So this sort of, I would say, an almost unhealthy focus on how much of DeFi is captured on one specific chain or another will stop being as much of a concern. I think it still will be a concern amongst maxis, but I think when you have that kind of interoperability, it becomes almost impossible to predict where these chains which chains are gonna capture value. Maybe we'll see that the grassroots is still too strong and it still can't be overtaken even when interoperability is there. Or maybe we'll see one of these ETH killers actually gain dominance in the DeFi space.
Good answer. Yeah, I mean, definitely a future I'd like to live in. In terms of, like, you know, especially seeing, like, you know, how much, how seriously you've taken, like, UX overall in Ren's case, and trying to, you know, kind of how you've solved for these different sort of kind of like peculiarities of, for example, like Ethereum that really doesn't fit into the, like, you know, a human being's, you know, usage of, you know, technical, you know, apps and so on. I think, yeah, this sort of, you know, obfuscating what specific protocol you're using out from the mind of, you know, the end user, that it's such a massive step closer to, you know, making it actually usable by the next, like, you know, million people, or by actually a million people.
Yeah, I think solving the UX problem is one of the big challenges between where we are here as an ecosystem and where we want to be with the whole world using DeFi.
Because I mean, like, one of the I guess, like, some of the solutions to, like, the gas problem we've seen from the DeFi wallets is that they've been subsidizing gas, right? Which was the beginning of this year. It was a ballsy strategy. Now I'm not even don't want to see the financial side of some of these wallets.
Yeah, I think, I mean, this is one of the, like, again, when you have a fee generating network, you can take advantage of that to solve some of these problems. So, you know, the way that RenVM solves that problem is by allowing users to, you know, have their gas paid for them by the network, and to them, they're just getting a slightly higher fee. So instead of 10 bips, maybe it's 11 bips, because some of that money is going to paying for the gas for you, because that's sustainable, right? Wallets that are just subsidizing gas fees, that has to end at some point unless you can generate fees.
In that case, I mean, it was, you know, the VC subsidizing that. So
yeah.
Which is, I guess, it's a modern form of wealth redistribution, right? But I know we're running out of time here. As you mentioned, you're building something very big, moving fast. So I'm sure you're very busy. A couple of just some very, like, quick, very short answer questions for you. Will ETH 2.0 staking come out this year?
Let's be optimistic, yes.
Nice. If you had to describe DeFi in one word?
Freedom.
Nice. All right. Thank you so much, Loong from Rens, for taking the time to give us this very engaging conversation. We wish you all the best, and I encourage everyone to dig deeper into Ren. And it's one of the few, I think, protocols where even still today, at its current size, the team is so incredibly approachable on Telegram.
yeah, we hope to keep it that way for as long as possible. But yeah, thanks for having me on and for chatting with me about this stuff.